So good.
Calypso. Okay.
So I have actually prepared like a slide for this particular bootcamp. So I'll be disclaiming this. It is not a financial advice. It is just for educational purpose. So this is what I actually want you to understand about this. So the psychological tips about it is that there is no strategy that you would trade that you don't have a loss. But when you make gains over loss, that's when you come out to be a profitable trader. And always have proper risk management to whatever thing you are seeing, to whatever type of setup that you are seeing. Do you understand? So that's that. So let's start. So I believe every one of us here, we are not really newbie like that. But even if you are a newbie here, this bootcamp would help you understand various things like where to get in, how to get in, when to get in, and your daily directional bias. Yeah, I believe a lot of us would understand this or might have gotten a lesson pertaining to this. But over time, we got to see that even the setup that we are looking at, price tends to like violate it. And some other times we would see that price would respect it. But we often do not know the reason why price would violate and why price would actually respect it. Now, there's one thing I will say, irrespective of what you've learned before, I'm not telling you to unlearn it, but I believe this bootcamp would surely help you guys to like add additional confidence to whatsoever you've been trading before, be it support and resistance, be it smart money concept, be it Malaysian support and resistance, be it liquidity inducement theorem, whatever type of system that you've been trading, this would actually help you like influence it in a better way. So once again, I'm disclaiming it. This is not a financial advice. It is only for what? Educational purpose. So let's move on. So basically, this is the liquidity hedge. That is a way to actually master the market sentiment through candlestick analysis. Pay attention to this. This is important. This is what will give you the bias through candlestick analysis, because how you get your intraday bias will still be based on this candlestick analysis. Do you understand? So that's that. So it is just for 3 days, and this is the guide. I just prepared it. It has not been up to an hour. I prepared this slide. So moving on. So the introduction to this is that you guys are welcome to the liquidity logic. Here we define the guide to mastering the complexity of trading with a focus on liquidity, which is the most important thing. One, this guide is designed to help you provide a deep understanding of the fundamental concepts. This is important. Strategies and techniques required to trade confidently and profitably in today's dynamic financial market. You know, the market is very, very dynamic. Everybody sees different things. We understand different things. I am not here to condemn anyone's way of trading, but the truth is we have edge over ourselves. That's the truth there. So while our primary focus is on forex trading, yes, just like myself, my major is even GBP USD alone. But with what I'll be teaching you today, you can trade any pair of your choice, any pair of your choice. And this would even if you are a crypto trader, it will allow you to like trade it. Can you hear me louder, guys?
Yes. We can hear you louder.
All right, good. So this principle discussed in liquidity logic transcend the asset classes, right? Whether you are trading stock, commodities, cryptocurrencies, or any other financial instrument, the concept of liquidity remains universal. Yeah, whatever thing, anything that has to do with candlesticks, the concept of liquidity remains what? Universal. So I'll be offering valuable insights. So liquidity logic offers invaluable insight to the market behavior. That is, don't worry, I will explain that when we are at the middle of the class. So the forex market is one of the world's largest and most liquid financial marketplaces with trillions of dollars exchanged daily. Everybody here, because I believe every one of us here, I don't think we even have a newbie here, but even if there's a newbie, you are just hearing it now. So the forex market is the largest financial market in the world at large. So it presents a vast of opportunities for traders who can effectively harness its dynamic. However, navigating this expansive and volatile landscape can be challenging for both beginner and experienced trader. This is where these particular guides come in, and that's the reason why I've actually prepared this slide. So on a good day, I would have just explained what I have to explain without any guide, just doing it often. But it's not like I will forget some part of it, but it's because I do not want to miss a single detail. You understand? You know, it's not like I will not remember, but there are certain things, certain informations that you miss out when you are not using a guide. You get? But when you are on the chart yourself, after which you've mastered the system you are trading. So let me take us back to the psychological part of this again. The truth is, irrespective of anything that you trade, you are never immune to loss. Just know that you are never immune to loss. You will take loss. But the thing is this is just an edge. Market has various way in which it actually reacts, various way. So, I always say this, that the algorithm is built on various logics. Once you can hack one of them, you are set for life. Do you understand? There are, see, a lot of ways in which the market moves. There is no strategy that is not profitable. The truth is, ask yourself, do you truly understand this strategy? So over time, I've seen a lot of people trading just within a month or 2 months. They would have gotten what is it called? The system, right? But probably the system is in its bad phase as at then, or probably they've not gotten the right mindset or the right approach to that particular way of trading. So they'll just jump from this to this. Okay, because I saw forexbrain trading this, let me jump to what he's doing. They can't tell you the actual reason why they want to jump to it, just because they saw this particular, probably before us trading this, they want to jump to this. Probably they saw DAX trading this. Probably they saw Corporate trading this. A lot of profitable traders like that. They'll just keep jumping from one strategy to another, from one system to another, without getting it. Do you understand? So that's that. So the liquidity logic here is to demystify trading by emphasizing the pivotal role liquidity plays in shaping the market's movement. It is very, very important. See, okay, well, don't let me even talk about that. We'll do that amidst what we are doing. So we'll explore its definition, very, very important, the sources and the implication, equipping you with strategic edge in any market you choose to trade. If you like, don't trade forex, trade cryptocurrency, trade synthetics, trade whatever you want to trade. Will just shape your mind and you will get your edge there. So by delving into this the topics such as one, the market structure, the order flow dynamics, the interplay between liquidity provider and the consumer. This is very, very important. It is very, very important. So you learn to interpret price action through the lens of liquidity. You can see I'm really like emphasizing on liquidity. It is very, very important. So now today you understand what a protected liquidity is. You understand what an inducement is. You understand it deeper than you have ever been taught. I am sure. Forget the fact that this is like a free bootcamp or something. This is what a lot of mentorship offers. Forget the fact that it is a free bootcamp. I am just doing this like it is just like a way of giving back to the community at the end of the year. Do you understand? So don't take it for granted. Be serious. If you put in the work, you will definitely see the result. You will see the result. Do you understand? And at the end of this bootcamp, I want to see like a lot of testimonies. Like you people that fail to like join, they miss out. People you get. So that's what I want to see. So uncovering high probability opportunities while managing. See, this guy is very, very important. But I will not be teaching risk management. Me to myself, I believe that everybody's risk appetite is actually different. Me, I can feel like I want to risk 1% of my equity, and you might just be comfortable with risking 0.5%. Some might even be comfortable with risking lesser than that. Somebody out there might be comfortable with risking 5% per trade. Do you understand? So I feel like anything above 5% per trade is actually gamble, irrespective of how your system has proven to be repeatable over time. Do you understand? So this guy goes beyond the theory, offering actionable insights and real-world example to help you apply knowledge in practical trading scenarios. Very, very important. Whether you are a beginner taking your first step or you are a seasoned trader refining your skills. I said something today that if you feel like you are already good and you are profitable, I see no reason why you should be here. And I saw somebody in the group today trying to like offer a what is it called, an account management. We are not here for that. And I will not be liable for anybody that you feel like you actually want to transact with. Let it be outside the community. Don't do it in the community, please. This is like how would I put it? Is a community to help us grow. You understand? So that's that. So liquidity logic provides valuable tools to enhance your trading journey. So as we embark on this path together, remember that success in trading is never guaranteed. Yeah. Yes, see, if you like, see the Holy Grail method. Success is not guaranteed, but you'll be successful. That's just one thing you need to put at the back of your mind. So it requires dedication. Yes. Perseverance, discipline, and thorough understanding of market dynamics. Yes, you cannot be 100% perfect, but at least you might even be right 6 times out of 10 times. You understand? You might be right 5 times. Due to your risk to reward, you end up being profitable. Do you understand? So, however, with the principle and techniques outlined in this guide, you will be prepared to navigate the evolving financial markets and pursue your trading goal with clarity and confidence. See this word, I emphasize on it. With clarity and what? Confidence. So let's begin the journey into liquidity logic and let's unlock the secret to what? Trading success. So I hope from what I have said, it has helped shape like some of us mind here. So let me just ask that if you who is there that is unable to join? You should be able to join. Okay. Who is unable to join? I don't know. If you are unable to join, I'm coming. Let me share this thing. You join this. Sorry, guys. Okay, good. So, if you are not muted, I would just like to hear from any of us, just one after the other, before we proceed into what we actually want to do here. So, this is just like the introduction of what we really want to do here. So, anybody? So, I hope this has helped shape our mind. So, has it done anything like? What were you? Is this what you are expecting?
Yes, we are good.
All right.
This is what we're expecting.
All right, good. So we are going to be proceeding into today's what is it called? Today's real deal. You understand? So I believe at the end of this class, everyone should be able to like trade independently. Yeah. And another thing is this: do not post after a trade has played out in the community. Please, it might lead to me actually making a decision I really do not want to like make. Do you understand? Okay, don't worry, I would move the rest after um we are done with what we just want to do. So now that's that. So moving on. So let's start with
Sir, before you go on, hello, sir.
okay, I'm here. I can hear you.
Yes, sir. Please, are you recording so that we can really revisit
Yeah,
it
it
and
is
check?
being recorded. It is being recorded.
Okay,
Don't worry, I'll create a library where I'll post all of those classes. Do you understand? So that you can have access to it anytime you so ever want to watch it. Do you get it?
Thank you so much, sir.
All right, you're welcome. So, without further ado, let's dive into the essence of liquidity and logic to uncover the secret of to profitable trading through the lens of liquidity. So, it is very, very important. So, to make things simple, see, the price itself is already complex, very, very complex. So, we don't need a system that is complex as well. We want just simple things. Simple thing. Even what you'll be seeing today, what you are going to be seeing today, is what you might have known before. But just that some of us do not really know the bias. That's the direction of it. But today is not actually the direction day. It has to be tomorrow, right? So that would even help you because there are don't worry, let's just continue. So to make things simple, let's start with the fundamental idea of liquidity. Liquidity simply means money. Everyone knows that liquidity simply means money. So when we mention the terms like liquidity sweep, we're referring to market taking money because the algorithm is built to like take money. So liquidity sweep occur when the market moves above a particular high. That's to take money. The money resting at those levels, usually in form of what? Stop loss orders and pending order placed by many traders. What does that mean? Let's say, for example, we have something like this. And then there's a particular trader that is selling from here, this high. So the stops will be above this high, right? Now, when price retraces, there's another guy that is looking to sell from this guy here. And the stop will also be here. Now, because of the idea of liquidity, and we know that the algorithm is actually programmed to actually take money, right? So price will go onto the liquidity and still move in the intended direction because of a lot of liquidity. That's a lot of money resting above it. So that's just that about that. So usually in form of what? Stop loss order or pending order. Do you understand? Now, another reason is that there are this type of trader that we call the breakout trader because they believe that this high price should not go above it, right? So if price moves above this guy like this, there will be a buy limit here. A buy stops here. And their own belief is anything that makes price violate this high, price should just continue going to that direction. Whereas price would only go to trigger their order, that's their pending order. That's why I said pending order and stop loss. For those that are willing to sell from here, their stop loss will be here. For those that want to buy, their stop loss will be below. So it will trigger both their their stop loss and their pending order and move in the opposite direction after taking them out. Do you understand? So that's the psychology behind what liquidity sweep is. So what happens in liquidity sweep is that above a high. So if the market trades above a previous high, but quickly reverse, it is important, quickly reverse and displace downward. A liquidity sweep has occurred, just like what I explained now. In simple time, the money or orders resting above the high has been taken by the market, which is what the algorithm has been programmed to do. Do you get? So that's that. So for us to have a bearish scenario, it means we would have a bullish scenario as well. So below a low, let's say we have an old low like this here. That means there is a lot of money resting below this low. Do you get it? So price will come back, take the money, displace immediately. Triggering buy stops, and then that's pending orders and stop losses. Do you understand? Because of a lot of orders that we have resting below this low. So as soon as this is taken, we want to see a displacement immediately. Do you understand? If not immediately, but almost immediately. So understanding this sweep is crucial because they often precede significant price movement. By recognizing where liquidity resides and how it gets taken, you can anticipate potential market shift and position yourself accordingly. Very, very important. Because if you already have that mindset, that psychology, that if you have a low, for example, yeah, and you know that this low is more like a liquidity, right? That we have a lot of orders resting below this. You know that as soon as this low is taken, you would have already placed your yourself. You know how to position yourself according to what the market dynamics, and then you can join it and do the opposite inversely. You get? So that's that about that. But all this will not be done randomly. It will be done in line with the trend. Do you get? So we would teach how to know the daily bias and how to know the intraday. Even long-term movements, you will know it at the end of this bootcamp. So this is just like we going to straight to the point. So I've explained below a low. So understanding this, okay, I've done that. So diagram and example. Now let's visualize the concept with diagram and example in the following section. We'll break down real world scenarios to highlight how liquidity sweep occur, and you can use them to identify high probability trading opportunities. So stay tuned and let's decode the language of the market through the lens of what? Liquidity. So that's that. Now, this is for a bearish scenario, just like I've said, I've explained this before. So this is an I. We have two types. Some would have already had a break of structure, right? A BOS to the downside. So price will go to this high, read the high, and then drop. Another one is just an old high, whereby price without a break of structure is still a sweep. Do you understand? So price, you can see this guy did not break structure to the downside, but this is still a sweep. So this is what we term as the word protected high. Do you get? So that's a protected high. When a liquidity is grabbed and then it led to what? A break of structure. Because either ways, we broke structure. That's the most important thing. After we have a sweep of liquidity, it should what? Create a BOS. You can see this, when we swept this high, it led to what? A BOS. So this is like a bearish scenario. So this is the chart example. So that I will not start going to the charts every time. So I've actually pictured out a chart scenario. So you can see an existing high. You can see this guy did not break this low. But then what happened? It is still a sweep. You can see immediately price raided it. All the stops that we have here, the resting liquidity. So people that believe that this high is a level of invalidation, this high that wants to like sell, or those guys that have been in the sell position before, that their stop losses are above this high, or even those ones that shifted their, what is it called, to break even. You can see what price did. Price raided it and still move to their direction. So these ones that are willing to buy, those ones that have placed a buy stops here, that their stop loss will be below this low. You can see as soon as we took this guy, we displaced to that direction. So that means their stop loss would have been taken, even if they want to use the low of this candle, even if they want to use the low of this candle, because of they believe it is a breaker or whatever they want to call it. Do you understand? So that's for a bearish scenario. So let's see bullish scenario. So it's still the same thing. An old low or even a low that led to a break of structure, the liquidity resting below it. So price will come, raid it and displace immediately. So this one that fails to like break structure, yeah, no break of structure, but still it is an old low. So price would raid it and displace almost immediately, but leading to what? A break of structure. This guy is important. Break of structure. So this is the bullish side. So this is like a sweep of liquidity. You understand? Then that led to what? A break of structure here.
Hello,
So
sir. I've
we
not
can.
seen the screen.
You are not seeing the screen. Is it only
Yes.
you?
Yes.
Who else is not seeing the screen?
So it was before there was a guy showing his face, so it was just like two screens at the same time.
Who is that? Please stop sharing your screen. You are disturbing the rest. Who is that? Please stop sharing your screen. You are disturbing them. Please. It's not even for my own sake. Me, I've done what I want to do. So it is for you guys' purpose. Please. Is the person still sharing the screen?
Not anymore.
All right. So you can see my screen very well right now, right? Please, if you can see it, kindly let me know so that I can continue what I
You
am
can see.
explaining.
Yeah, we can actually see your screen. Although you minimize already.
Okay. Please, nobody should share his or her screen, please. Okay, so this is for the bullish scenario as I've explained. Do you understand? So this is one of the first things that you really need to see on the chart. You would even be surprised at what you'll be getting today. Very, very fun. You'll be surprised at it. You might be thinking like it is a free class, but the value you'll be getting would be beyond what you are actually expecting. So that's that. So we have types of liquidity. different types of liquidity, but we want to be paying attention to just two. So we have what we call the transactional, and some other they call it external liquidity. Do you understand? Some even go as far as calling it target liquidity. Do you get? So the question is, what are transactional liquidity? So transactional liquidity, also known as external range liquidity, refers to the liquidity that must be swept before a retracement. That is, if we are in a bearish trend, for example, like this, all the lows, they are what? Transactional liquidity, because they must be taken, even if any retracement will take place. Do you understand? So they are, what is it called? All the lows in a bearish environment, they are the lows that will be taken, even if any retracement would actually take place. Do you get? So in an uptrend, the market target the high to sweep liquidity for higher highs to form. Yes. So these highs must be taken out for a bullish environment. This is the market clearing out resting order, e.g. stop loss or buy. It is still liquidity. All our target liquidity is because we have somebody that is buying here at this guy. So when they are buying, price will still come back to like clear those liquidity and trigger people that believe that price should continue selling, retrace against them, and it will still go their way. You can see people that are buying here, when price took their stop loss, it still retraced. That is, price still moved to that direction. Those that want to sell, when price took this, retraced against them and still moved in their direction. You understand? So a lot of them will be thinking like, is it the village people that are after my life? Is it these people that are seeing where I'm placing my stop? The algorithm is not seeing where you are placing your stop. So, if you do what the market is doing, you come out being a profitable trader. So in a downtrend, the market target low to sweep liquidity for a lower low to form. This low must be taken out. Yeah, and they are what actually led to a break of structure. So transactional liquidity is essential for understanding market structure. It reveals how the price move in search of liquidity to fuel its next leg, whether it is called a retracement, or whether it is in a retracement or a continuation mode. Do you get? So for transactional liquidity, what is the significance is that when they are used to as a target area, that is, if we have, let's say we have a range like this high to this low, and this is the transactional liquidity because it is bearish. So let's assume we're able to like get a sell from here. This is our ideal take profit. So they are known as what? A take profit level, and they do not lead to reversal. Do you understand? Because they have to be taken before a reversal would definitely occur. So this is the chart. The pictorial representation of it. So this is our transactional liquidity in a bearish environment. You can see even when price grabbed this high, it still took this transactional liquidity. So all of these lows are what? Transactional or external liquidity. So I'm even go as far as calling it a target liquidity. Do you understand? Just know that they are potential take profit targets. Such that if you are looking at price may continue going to your direction. Yes, price may go to your direction, continue going to your direction per se. But when a target liquidity or an external or a transactional liquidity is taken, just know that price is most likely going to like pull back for a new leg to continue. Do you understand? So it is always ideal to take profit at what? At transactional liquidity levels. So like this is for the bullish scenario. You can see in a bullish environment. So the highs will mostly be taken. So if a low is swept here, it is just what? Price grabbing liquidity in a bullish condition. Do you understand? So that's that. So let's move on. So this is the example here, the chart example here. So you can see this low is a transactional liquidity because it led to a break of structure. Transactional liquidity, this low, when price pull back, transactional liquidity, they will be taken. So in a bullish environment as well, transactional liquidity, even this is a transactional. Just know that the highs in a bullish environment, they are transactional or external liquidity. Do you get? So this is also a transactional liquidity, and so on and so forth. So I don't know if you have a question before we move on to the next phase. Is there any question like you really want to ask? This thing they are actually simple. Does anyone have a question before we proceed? Okay.
No,
I
sir.
think yeah, we have a question.
Can you really explain this transactional liquidity again?
Okay, please come again.
No?
I cannot hear you. Please speak louder.
I said this transactional liquidity. Can you just hint on it? Can you hint on this transactional liquidity again?
Okay, but the thing is this,
Hello?
yeah, I can hear you. I can hear you.
Eh,
This class is being recorded, right? So you would have the privilege to like watch it over and over again and until you grasp it. It is very, very simple. It is just an external liquidity. Do you understand? Transactional liquidity
okay,
is
okay.
external
It's
liquidity. Yeah, yeah, it's very, very simple. There are
okay.
things that you might have done before. I don't know, irrespective of whoever you are learning from. This thing are actually simple things that they are meant to be taught. Do you get? It's because of it is part of what we need. That's why we are teaching it. And this is me going straight to the point and not beating around the bush. Do you get? So that's that. Let's move on to the next thing. I think nobody else have anything to like ask. So let's move on. So this is the most important guy that actually confuses a lot of people, a lot of people. It is called the inducement or what the structural liquidity. Now, inducement liquidity also they are referred as internal liquidity. That's the truth. They are internal liquidity in most cases, except when there is no internal liquidity. That's when a structural point would be used as liquidity. Don't worry, I will explain what I meant by that. So inducement liquidity also referred to as internal range liquidity or structural liquidity. They plays what? A pivotal role in driving the market continuation. It acts as fuel. Yes, liquidity is just like a fuel. If you want to drive a car without a gas in it, it is definitely not going to go to anywhere. Never. But as soon as there is fuel in a car, it will move. So they propels the market forward in its existing trend and giving you that ideology that they have actually changed trend. So what is inducement liquidity? Inducement liquidity refers to the liquidity resting within, listen, see, you can see that I'm laying emphasis on the word within the internal structure of the market, such as high or lows within the broader trend. When this liquidity is taken out, it often signals that the market is gathering momentum to continue its expansion in the direction of what? The current trend. So in a downward or a bearish trend, the closest eye to the protected eye. So what I mean by that is this. Let's say we have different types of structural inducement liquidity, which I'll still explain. Okay, let me just continue. So the closest eye to the protected eye, a key swing eye in the downtrend, is typically an inducement. When the market sweeps this eye, it gathers liquidity needed to fuel the continuation of the bearish trend. So the same thing in an uptrend. So the key concept in this ideology is that the market behaves like a car that requires fuels to move, right? Liquidity serves as the fuel. Inducement liquidity provides the market with the energy needed to sustain its trend. You understand? So that means they need to like manipulate some set of people for them to continue what they actually want to do, right? So ensuring continued price expansion in prevailing direction by identifying and understanding inducement liquidity, traders can anticipate when and where the market is likely to gather liquidity needed for the next continuation move. Do you understand? So what am I explaining here is this. Now look at this. You can see that we had this as a sweep. Remember, I talked about a sweep of liquidity. That is, you can see we have two types of sweep, irrespective of anyone that presents itself. Your own, how do I put it? Your own concern is where did we break structure to? We call there's something we call HMP. Don't let me go deeper into that, please. Let me just ignore that so that I will not confuse you guys. You understand? So let's just talk about the CMP, which is the current market price. So where did we break structure to? So you can see that we are violating the laws here. Despite the fact that we took this side, but yet the last thing we did was that we broke structure to the downside, isn't it? And then again, we broke structure to the downside. You can see that this guy looks flat. There is nothing within it. So that means this eye here is the next guy that price, and it is protected. And we said the next eye closest to the protected eye is what? Is going to serve as our what? Our inducement liquidity. Do you understand? So here, all price needs to take is to take what? Transactional liquidity or inducement liquidity. They are the same. Sorry, I think I actually made a mistake. I wanted to write inducement liquidity. This is the inducement liquidity. Do you understand? Or we call it internal liquidity, because the true range is now from this high to this low. But when we get to range, I would explain that. So now we have the type that price will break structure 1, then structure 2 will be broken, right? And the high of structure 2 that got violated will now be the inducement for price to get to the protected guy, and then we can sell for this to be what? Our transactional liquidity. Sorry, I was in haste. That was the reason for this mistake. I'll correct it later. So this will now, when price takes this inducement liquidity, because if you look at this guy, it is not protected. So when price takes this inducement liquidity, we want to like ride it to the downside. Do you understand? Now the second type, this is more like the type 1 of what we call inducement liquidity or structural liquidity. Yeah, because it is a structural point. Do you get? So this is the type 2. Before a break of structure, we have some people might even go as far as calling this a flip, like demand to supply flip, whereas they want to take their next trading opportunity here. But that's not true. The structural point here would lure a lot of traders, just like what I've explained, this psychology behind it. It will lure a lot of them to like want to take trade here. And when price violate this, they want to take a trade from here, meaning that when price is coming. So this is just to like create a lot of confusion for different types of traders. So this is the example for type 1. You realize that we had, I did not even mark this thing well, sorry. But let's just say this is a structure point because of the 3 candle formation. So we had a break of structure to the downside here. We grabbed an eye. Then what's this now? So okay, so we grab this eye as making this guy what? A protected eye, isn't it? So this is a protected eye because it grabbed liquidity and it led to a break of structure. You can see that this guy failed to, let me zoom it out. You can see that this guy did not grab any liquidity. It just led to a break of structure, a break of structure. So this eye is what? An inducement liquidity, also what? Known as what? Structural liquidity. So our range will now be from this eye, from that low to this eye. That's from year to year. So price did what? Retrace all the way back. Given these people that want to continue a buy here, you can see the reaction. It meant that a lot of people want to buy here, and it actually violated them, right? So here, price did what? Induce this eye to tap into this. If you trace it to the left side, you'll see what I'm talking about. And then price displays to the opposite direction. So a lot of people that want to look to buy here would be like they will be clapped. That is, they will be taken out. So if they place their buy limits here, you can see this bullish candle, this black candle here. It means that there's a lot of people that are trying to buy this guy, but they ended up being what? Violated. So this one is for the type 1. Now for the type 2, before a break of structure, you can see that we swept liquidity, and existing high was taken, and then we broke structure. But before breaking the structure, we reacted from this demand, giving this guy like a demand to supply flip. That means a lot of traders want to sell from here because they believe in the flip transactions that happened within these 2 guys. But the truth is this: you can see we have an imbalance below it. I mean, above the flip guy. And then what did price do? Tap into this guy and deliver to what? The transactional liquidity. That's just how simple it is. Very, very simple logic. Very, very simple and straightforward. That's what you want to be looking for on the chart. Do you understand? If you don't see it on USD, you go to GBP USD. You go to you check it across multiple pairs, and I am sure you get trades almost every day, depending on how you have actually gotten the ideology. So, and these setups you'll be checking them on the 15-minute time frame. You understand? So that's that. So let us move on to the next phase. So for the bullish side, the same thing. You can see a sweep of this low, a break. You can see that we had a pullback before this. It's just that I did not want to stress myself to look for the bullish type of this guy. So I just feel like I've explained the bearish type, so you can look for it. But I saw this bullish example, so you can see the pullback before the break is what? A liquidity. That's an inducement liquidity or a structural liquidity. And the transactional liquidity is always what? The target. So price retraces all the way back into this, inducing this guy, and then it's move all the way to the what? To the transactional or external liquidity. Do you understand? So that's that. So this example is for this, just like this. You can see reaction from this. So far here is protected. Sweep of liquidity, break of structure. This would act as what? Inducement. I want to see price come back into this. And all of these things would be in line with something. I know some of us might have gotten across with, like we might have gotten this, but there is something that you need to know, that this thing can present itself against the trend. So if you don't know the trend, you might be burnt out. Do you get? So that would be what we would explain tomorrow. So let's move on to the next guy. So now we have known what we call the protected eye, and we have known what we call the inducement liquidity or structural liquidity. So basically, they are just internal. Inducement liquidity, structural liquidity, they are just basically internal liquidity, irrespective of how they present themselves or itself. So they can be in form of a structured liquidity. You understand? They can be in form of an internal liquidity in like a flip zone. So understanding the trading range is what plays a crucial role in what we are doing. So in trading, the concept of trading range help us interpret market structure and determine our position within the market. You understand? So that means if we have something like this, we can see it's obviously that we are bullish. But do you want, let's say this happens on like H4. Do you know how to tell me that you need to wait for price to come to the extreme before you buy? No, you don't need that. So trading range is what would really help you know where you need to like position yourself on the chart. You understand? It's not like it is a lot to do. So viewing the market movement through the lens of trading range provides clarity on where the market stands and where it might head next. Very, very important. So the key component of trading range is what we call the range cycle, a recurring phenomenon that gives traders strategic edge. By understanding this cycle, we can identify opportunity with what? Precision and maintain clear directional bias. Yes, without even going to the higher time frame sometimes. But we will not want to do that because we want to apply logic and not trading the pattern. Applying the logic is what is really, really important. So the core element of a trading range is what we'll be discussing now. At the end of trading range, we have several critical elements, collectively referred to as core elements. Among these, the bullish and the bearish QM, Quasimodo, are fundamental. What do we mean by Quasimodo? Quasimodo is just what? A protected liquidity. That's a grab of a previous high. That is, if we have an high like this and it gets swept and price still broke structure to the downside. So that's the first element of a trading range. Very, very important. It is very, very, very important. So that's the first element of the trading range. It can be in this form before a break of structure occurred, and it can be in this form when a break of structure has occurred, sweeping this high and still going to that direction. These are the two types of QMs that we have. So we have bullish and we have the bearish QMs. So the QMs act as structural foundation for identifying when a range is established. These are straightforward to recognize and essential for understanding the market dynamics. So I've explained the bullish QM. The bearish QM. So use that for the bullish QM. So sweep of liquidity to the downside for a bullish environment. And then what did price do? Break structure to the upside. It's as simple as that. A sweep to the down, a break to the upside. That's the core fundamental of what we call the trading range cycle. Do you understand? So this is the first thing that you would really want to see anytime you get to the chart. So that's that. So let's move on to the next one. So this is an example of what I am talking about here. What is this? Okay. So why QMs matter in trading ranges? Bullish and bearish QMs highlight the transactional point where liquidity sweep and structural shift occur. Do you understand? When that means money have been taken and price has shown the significance power that it is moving into a particular direction. So it actually shows that is taking of money and price showing the strength to its intended direction. That's just the transactional motive behind QMs. You get. So these elements are not only define the boundaries of a trading range, but also provide clues of potential market direction. Yes, because of where we broke structure to. So it means that that's the particular place that we are actually heading to. So by incorporating QMs into your analysis, you gain a powerful tool to identify trading range, understanding the market structure, and anticipate the next phase of the trading range cycle. Do you understand? So the QMs, which is the first thing that you really want to look out for. So like a sweep, and then a break, or even a break within. Do you get? So that means this is a possible area that you can be looking to look for potential trading opportunities. So I've explained the bearish side, so you can digest the bullish side as well. So the range cycle is what we now really want to talk about, which is we've talked about the first guy, and we've talked about a lot of things. We've talked about the transactional liquidity. We've talked about the inducement of structural liquidity. Now we've talked about the QM being the strong guy, right? So these are the elements of a trading range. So the range cycle provides a systematic way to analyze trading range and anticipate market behavior by understanding its three key aspects. Very, very simple thing. You are only looking for just three things on the chart. Three things. So it has to be very, very simple. Keep it extremely simple. You understand? So you can identify the beginning. So the beginning of the trading range, the middle, and the end of the trading range with precision. Emphasis on this guy. With precision. So the three aspects of a trading range cycle includes one, a strong high or a strong low. So let's do for a bearish scenario, which is the QM that we've talked about, known as what? Protected high or low, or what we call the Quasimodo. So this marks the initial structure of a range and serve as what? The foundation for the range cycle. So let's do for a bearish range. So the first thing we want to look out for is an high. That's I already established, put the diagram below. So we have what we call the sweep of an eye that led to a break of structure. That's the first thing. So this is for okay. So this is for a bearish range, and for a bullish range, you want to see the same thing. So this is the first thing you want to see to identify that okay, a new range is starting to form, right? So the second thing, so some people call it the A leg. Yeah, I think I saw somebody on the internet is also. So let me just incorporate its own ideology. So this will be seen as the A leg, just so that it will be simple, so that you know that okay, I'm looking for just A leg, B leg, and then the C leg, which will be my target. So this is the A leg. Now the B leg will now be what represents the internal range liquidity that price will take out to gather fuel for what? Continuation, which means it can be in form of this, like a structural break, meaning this is the B leg as what? An inducement. And it can as well be in form of this, meaning A, because it swept liquidity, B, because it is what? A structural point, and it is what is within this range high to this range low. That's what price needs to grab to continue. That is price taking internal liquidity to target external liquidity. And the C will be the transactional liquidity. So it's the target of the cycle. So let's assume this happened, price took this and broke this. Price will pull back again, drop, and then you can see that this is now the new A, the new B, and then the C. Sorry, that's not the C. And yeah, this is the C to the downside. So sometimes it can even, before the C will be created, we might have something like this and then a break, meaning that price will come back to this guy for a new range. So this will be A, B. So price needs to take this, and C to take C as the target. So always take profit at the target. So the type 1 range cycle setup. So I said we have the one that will lead to what? A BOS, and then a second BOS, and this I. You can see because this I did not grab anything from the left, then it is not protected. So it would act as what we call the inducement liquidity or the and it is within. So they are basically internal liquidity. So all price need to do is to what? Pull back into this guy and then drop to the downside. That's how simple it is. So here is an example. You can see we had a break 1, BOS, break 2, even break 3, but because they are not protected, so price retrace back to this point of interest, and then C, this will be the target liquidity or transactional liquidity or external liquidity. So this is our setup. I call this my A plus setup. When this is presented, it has a higher probability over the other type, but both actually works, because if you want to start looking for the other type without looking for this, I mean, if you want to start looking for this without looking at the other type, you might end up missing out. Do you understand? And this should be done strictly with the trend, which is what we'll do tomorrow. How to get the daily buyers and all. So next tomorrow we'll just do question and answer and what we've seen. Do you get? So you can see I call this is our setup. I call this my A plus setup. After getting what? Sweep of liquidity 1. I wait for what? 2 BOS, break of structure 1. I wait for the second BOS, and then I mark out this I as my inducement and wait for price to come and take this guy. You can see, take the inducement and then write the continuation to avoid being trapped in the market. Very, very simple. So you can use this for the bullish. Okay, I just did for the bearish. So you can flip it and you understand the bullish cycle as well. So this is the next thing. So for the type 2 setup, which is, we have this type 1, a sweep of liquidity. Very, very important, making this I a protected guy. Then a break. So before the break, we don't necessarily need to have 2 break. We just need what? A pullback before breaking structure. So this is just like a single break. So the I of this guy is what will act as what? Inducement liquidity or internal liquidity. Then the point of interest is where we want to see price tap into, and then we want to ride it to the what? To the downside. So it's not going to be perfect like I draw, but if you get this, it will change your trading game. Now, we cannot move to the next deal because it's how to get the directional buyers, which is what we are going to do tomorrow. Do you understand? So I don't know if anybody have a question to like ask pertaining to whatever things I've taught in this particular class. I don't know if you have a question to ask. You are very, very free to ask me now. Anyone?
So, hi, forexbrain. Thanks for this class.
Yeah, you're
Can you
welcome.
hear me?
Yeah, I can hear you.
So, regarding the liquidity aspect, what if
Yeah.
your what's it called? Your chart is showing you like triple B's. Like when I say triple B, like triple structural liquidity.
Okay.
Then how do you know which one to follow? Or
You are
let's say for example, you have a liquidity sweep, then it created that B that you are looking for. That is a structural liquidity, or you call it inducement, right? Then it
yes,
came
yes,
back to the second structure. Then you were expecting it to go back to the strong I, but
yes.
unfortunately, it swept and just went back and created another B. So are you going to
Okay,
wait for that first order block, the strong I, the
okay,
highest one, to hold,
okay,
or the one it just created?
okay. I'm coming. I will explain that now. Let me just try to unmute, allow people to speak. Okay, good. So this is what you are asking. Okay, this is load now. Okay. Okay, good. Now this is what you are asking me, right? That if you have, do I have a blank book? Okay, let me use that page. Okay, let me use here. So this is what you meant. That if we have something like this, sweep, break, we have this, and then we broke this, right? Is this what you're asking? That, yeah, this is where we were expecting price to come to, right? And then price pull back, probably a little bit, drop, and swept here again and break structure. And we have something like this. That, are you still going to be waiting for price to come to this? Is that
Exactly
your
my
question?
question. Yes, sir.
Okay, you are interested in what we call, that's what I wanted to talk about before, but then I just felt like not to talk about it so that I will not complicate things. Now, here is already a new trading range because this is what? A BOS. A BOS. This is what we call the current market price. CMP. That, you remember, I actually wanted to talk about HMP, historical market price, and current market price. So you are interested in this guy now because this has shown what? A power of what? This is a protected liquidity here in this instance, and this is the structural liquidity. So as so far this has formed, do you get? So far this has formed. This is the structural liquidity here. You are interested in this guy. This is where you want to ride it from. But there are other times whereby price will just come back to this guy and then still drop. You get? But this is your own focus. So when price gets here, you are not even targeting this low. You are just targeting somewhere here. If you can get this here, not necessarily targeting here, because this can lead to what? A true change of intent or a change of character. Do you get? So price can do this. So you'd have taken your profits this. Given that vibe, I'm coming. Okay. So price can do this. Meaning this is a change of intent or a change of character. And then probably tap into this initial guy, drop like this, break once again, and then come back for this guy. But you'd have taken your profits here and then go. So inversely, this is what? This is also a BOS to the upside. Sweep of liquidity. Then this is an inducement. So price came back to mitigate this. So you need to always pay attention to the current range. I think that has answered your question.
So if I get you right, sir, that means I will
Yeah,
focus on the current market direction.
exactly. That's what you focus on. Yes,
Then
that's
if
what you
it will
focus
now break the strong high, then we look to just sell for a short time and
on. Exactly, exactly.
continue the
Something
long
like that. Something like
term.
that. Yeah, and there are other times whereby price would even tap to this guy and it would drop to this extreme. Do you understand? There are times like
Okay.
that. Yes.
No
So I
problem.
would, don't worry. By then I did not intend to do that, but I will share some of a single candle confirmation entry that you would use because in this bootcamp I am not talking about entries because I believe that a lot of us have the way in which we look at price prior to this time. So I did not really
That
want to
was
talk about.
actually my second question, but you've touched it already. So thanks for that.
All right, all right. So anybody else? Does anyone have a question to like ask or something? Anyone?
Thank you, sir. Good afternoon.
Good afternoon.
Uh, thank you for this opportunity. My name is Okwenpo. Okay.
You're welcome.
Actually, I, um, I, I have maybe probably what I need is help in some regard in how to look at trade. I discovered that most of the time, whenever I set my trade after doing my structural breakdown and everything, I don't know if I can just share my screen in a bit of second because something just happened on GU that I've seen happen over time, like that. Maybe
Okay.
probably I'm missing.
Okay.
Maybe I'm probably missing something which you can help me just throw more light on. I would really appreciate if you
Okay.
wouldn't
So
mind. Just can I can you see
okay, go on, go on.
my screen now? Can you see my screen now?
Of course, of course.
Okay, okay. So I saw that price didn't really even tap into my entry zone, but it just uh took out this point, took this liquidity around here and boom and went back up. So I don't know, maybe probably I'm missing something or I don't know
Okay.
what I'm not
You
doing right. Maybe if you can.
okay, good. Good. Initially, I never wanted to talk about this particular type of liquidity. It is just like a boot camp. So I do not really have to touch almost everything. But what I've touched would play a lot of things. Like it will shape your trading way. But because of what you just shared now, let me just quickly
Yes.
highlight something for you.
Okay.
So let
Okay.
me try by sharing my screen once again.
Okay. Oh, okay. All right. Let me unshare.
I actually never wanted to talk about some other types of liquidity originally, but because of what the question you asked, because there is no way I am going to like explain it without there's no way I will answer your question without touching it. You understand?
Okay. Okay.
So now, there's no way you, except I am not letting you guys ask me some kind of question, which is not good at all. But there's no way you will ask me some question that I would not touch some things that I literally do not want to like talk about. So, but let me just do it since I am here to like do it. You get? Oh, don't worry. Majority of these things you are not even going to like battle with what we call intraday bias, those daily bias. You will not battle with it. By the end, you will see it tomorrow. By the end of tomorrow, you will see that you will not battle with what we call you will trade anything. So now we have other types of from what you have just asked me. Other type of range that we have is when we have something like this, probably maybe like this. Can you guys see my screen?
As we can see your screen.
All right,
You
good.
can see.
So we have a sweep here, a sweep of liquidity, a break of structure, which is
Okay.
one characteristic. This is we have two characteristics of what we call the trading range, meaning we have the A, but there is no B. So there are often times where my price needs to like rate this high. This guy will now serve as the B for probably a smaller range that is here. So this will be A, B. But there are other times whereby price would do not need to like, price do not need to like take this guy, this high. No. All price just needs to do is this. When price gets to this guy, it will drop, create an high, break structure to the downside. Meaning that we have what? A lot of people looking to sell from this, creating what we call a self-inducement. You understand? So yeah, all you need is this. Price is not even interested in your point of interest. That's the funniest part of price. He's not even interested. Price is only interested in manipulating. So we have a lot of resting liquidity here. You can see that this one is not this type. No, it is not this type, right? But it came and it created what? A BOS to the downside. All you need to do is, after price has taken this guy, you can scale down to the lower time frame and use, without tapping to this point of interest, you can scale down to the lower time frame and look for whatever type of entry model you use, and then you can target this low. It's as simple as it. Does not even really need to tap into this guy. It is not even important. There are other times whereby price use what do we call it? Fair value gap as a point of interest, and it will not mitigate whether it is your order block, whether it is your QM level, whether I don't any type of UI, whether it is your week, whether anything. You just need to like use this fair value gap or imbalance or however name you call it, and then it will drop to this guy. To this C. So in this type of context, this will be A, this will be the B, and this will still remain the C. You understand? But this is the first C, internal. This is where you will take main volume out. You will know how to manage your trade. I'm not here for that. So in your own case now today, if you check your chart, you realize that this is what happened here. I feel like, hold on, the POI is somewhere far to that inducement. Probably here. Something like this. So here, and then we had something like this. So price came back to rate this without even tapping to the PI. You were expecting price to come here and drop. Price is interested in raiding what? In trade sweeping liquidity. that's taking money. See, there's a lot of money here. So there's a lot of money resting above this high. So price is only interested in pocketing those money. And so price is attracted to what we call liquidity. So when price has grabbed this internally, this is more like a self-inducement. So price will just go. The mitigation of POIs are not so extremely important like that. You understand? So there are many times whereby you see that price will not even get to your POI and it will go to your internal direction. When else you are still waiting for price to come back to the POI, price will invalidate the POI. So it happens like that. I think this should like answer your question, if I'm being right.
Hello, sir.
Hello, I'm with you.
Yeah, he answered his question, but also brought up another question. You made mention of something while explaining your answer. You said
Okay.
it might happen because it's not closer, the B is not closer to the A, which is the strong high, right? Strong high or strong low. So
Yeah.
are you trying to insinuate that if our B or our structural liquidity is not closer to our POI, excuse me, because like you said, POI is not being respected in the market.
Yeah, you guys just want me to go deeper. Okay, let me just do it. Now, this is it. These are the things that I literally do not want to like explain originally, because I'm sure from what I've explained, you might not be getting all the trades, but you'll be getting trades. You get. So let me quickly explain something to you. We have, and I'm not supposed to explain POIs because I believe you guys would have known it. So we have what we call just 3 types of POIs that are very, very important. The first one is the extreme, which is the order block. The second one is what we call the QML, the Quasimodo level. And the third one is what we call the breaker block. These are the only 3 important guys that you really need to like use. Now, what is their significance? You use order block when, because price is interested in the POI that is closest to the structural liquidity. So let's say for the case of order block, let's say we have this. We have this. And then we broke structure once again. Now, after this guy, this is the only point of interest that is available. So if price will read this, they will use that to mitigate this guy, because this is you can see the distances between the structural liquidity and the protected eye, right? It's not really far. So during those process, they will use that chance to mitigate this guy and then continue the move to the C leg. Now, when do we use QML? So I've talked about order block. So when do we use QML? Is when we have something like this. Boom. Now, you can see that here in the first scenario, the first mitigation that created this guy, this structural liquidity, was as a result of mitigating the QML already. So when a point of interest has been mitigated, then it will not be be reused again, right? But looking at this scenario here, you can see we had a break, but price has not mitigated the QML here. This is your point of interest here, POI, because that's the next point of interest that is closer to the structural liquidity. But your point of invalidation still remains the eye of this guy. So it now depends on the type of entry model that you use. You get that will determine how tight your SL will be or how wide it will be. So that's that. Now the third scenario is now, how do we use and when do we use breaker block? There are 2 ways to actually use breaker. The first one is, let's say for example, we had this. Boom. Now, you can see that we had a sweep, then what? A break, an inducement. Now, price now got to this guy, violated it with what? An impulse move. This that was supposed to be used for the buys originally is now what price will test and use for the sell. Do you understand? That's one. This is the first one. You can see that it is inversely a protected liquidity, but because it was violated for the particular idea that I should use, So price did what? Instead, price violated it. Price will come back to retest it, and then it will move to the. This one is like extremely advanced in a way. It will come back to it and then displace to the downside. Now, there are other times whereby this one, that's the first way it can be used. The second way is this. Steal this guy. Boom. And then a break to the downside without a mitigation of that guy. Remember, a lot of people would feel like, okay, this is like a sweep of liquidity, and then we broke structure. So this is still the extreme. Some people might even be waiting for price to come to this QM level. Price will not come to the QM level because where is the structural liquidity related to what? A supply or a demand? That's price would only seek liquidity in respect to the recent demand. That's the closest demand, the point, closest point of interest. So here, price will just do this and drop. Do you get? So this now can now act as liquidity for the fact that it is protected. If it does not have its own like inducement for the other flow to continue, because what is another flow? It is a trend, and as well the last buy before a sell happened. So this is another flow. So that means this AO area has been fully mitigated in this context. Do you understand? But there are other times whereby price will do this, create this without an inducement. So in most cases, price will go for the next POI or probably even this one. But in most cases, it will go for the QMs and then drop. So the rest scenario can now be followed. Do you get? So I don't know if that has answered your question.
Thank you very much. It has.
All right. So
Well, I guess
anybody
you
else?
said tomorrow you talk about the one candle insurance. Thank you.
The direction, yeah, that's for tomorrow. So next tomorrow, it will just be like we want to like ask ourselves, what have we learned? What can you now identify? You see, you need to put in the work. Oh. That's the truth there.
Can I talk?
Yeah,
Sorry.
yeah, you can.
Okay, so all I've learned this today now is my market structure.
Yeah,
We should always look at market structure to know the next move, especially the current
exactly,
market structure. So, and
exactly.
if market is on maybe bear trend or bull trend, we should always look for maybe liquidity sweep, which is the protected liquidity to
God
aim
bless you.
at your
God
POI,
bless you.
right? So in a
Exactly.
situation that maybe your POI couldn't even the next move of the market couldn't sweep the POI, and it's form as range liquidity kind of the next the next liquidity that is coming there now, it will just come and sweep the range liquidity before dropping down in your bear trend.
You, yeah, I said something before we
Yeah,
started this call. I said we have a lot of ways in which price react a lot. But here I
okay.
am just like show us the one that I see that they are like high probability. Do
Yeah,
you get?
yeah, yeah. I get you.
Yeah.
Yes.
And other ones are high probability as well. But the thing is, you cannot know everything based on how the price moves. If you want to do that, that means you need to go behind the algorithm to see how it is being programmed and all of those things. So, what your own focus is this: if you are not seeing what you are looking for on the chart, you don't have it set up on that particular pair. That's the honest truth there. If you cannot see, okay, he said this is what I should be looking out for. So if I cannot see this, what then am I doing on that pair? Why wouldn't I move to the next pair to look for what I am looking for?
Yeah,
Do you understand?
exactly.
Yeah,
Yeah.
that's just it. You can't if you see there we have a lot of things that I'm supposed to like. If I want to teach it, I will teach it. But the thing is this: you just need one system, and then you keep repeating it, and
So
increase the sophistication.
the whole point of this thing is about liquid structure, market structure.
Exactly. So,
Okay.
and how to get the buyers. If you go to if you go to X now, you see a lot of people showing you this, this that every day to come in. There are times whereby, have you ever asked yourself, like, okay, I've seen a lot of people posting this particular thread. Yeah, please, if your background is noisy, kindly mute, please. So, have you ever asked yourself that if you analyze trade, you'll be looking for this particular stuff. Yeah, probably this type or so. And price will do this.
Ibrahim, please check your background, please. Ibrahim, check your background.
So have you seen this? That you will see protected guy, you see structural or inducement liquidity, and then you'll be expecting that okay, when price gets here, I want to take a trade. But yet price will still violate this and go impulsively. Have
So,
you seen that?
in a situation when there's something situation happen like this now, and the whole trend has changed to bullish trend. So we now start to wait for the market to have a protected liquidity first, right?
Exactly, something like that. But what I'm asking is this: have you asked yourself, like, when you see this, but yet price will violate it like this and push to this direction? Has that happened to
Yeah,
you? If yeah,
yeah. I've seen it several times. Yeah.
yes, it's because you are not applying the logic. That's the direction of which is what we really want to do tomorrow. You understand how to
Okay.
know the overall direction of where price is heading to. Everybody knows liquidity graph, break or structure inducement, even if they don't truly understand it, but they know it, right? But
Yes.
if you are not doing it in line with direction, then in most cases you'll be clapped. If you like,
Okay.
repeat it 1 million times, it is still the same thing that will happen to you. Everybody can experience winning trade without even having a skill set or something. But what you need is consistent results, right? So
Yes,
that
sir.
requires you to have a skill, right? So that's just it. Don't worry, we will do that tomorrow. But I think a lot of us have gotten our hands on how to actually see the market from the range perspective.
Yes, sir. We really appreciate it, sir.
So that's just that. You're welcome. So I think
Uh,
I don't know if anybody else have a question to ask before we call it a day. Anybody else? Anybody?
okay, sir. Sir, one more time, please. The most
Okay.
effective time for trading is it 15-minute time frame?
This setup is basically on 15-minute time frame. Don't worry,
Okay.
when by tomorrow, when I'm teaching the direction, I will tell you where to look for the daily direction and the setup
Okay.
time frame. But it's basically on 15-minute time frame. When you get
Okay.
your direction on the daily time frame, you just scale down to 15-minute time frame to look for your setup. And if it's not too
Okay.
clear on 15 minutes, you go to 30-minute time frame. That's how simple it is. Very, very simple. You
Thank you so
understand?
much. Yes, sir.
You're welcome.
I understand
So,
better now.
all right. So who
Yes,
else?
sir.
Who
Hello,
else?
Forex Brain.
Yeah.
Sir, it's just an appreciation for your time.
You're
We are
welcome.
grateful for you. I've been with you for like almost 2 years now. I've been learning a lot and so many things. So we are grateful for your time for this free class. I think this is what people pay 100,000 plus to learn, but you are giving it for free. So we are
Yeah.
praying that God will bless you and give you
Amen.
more
Amen.
ways in Jesus'
Amen. And you too.
And hi, please
name. Thank you, sir.
can you drop your IG account so we can just try follow up?
Okay. Okay. I will drop it in the channel that I'm using to host this call.
I noted. Thank
Thank
Also,
you,
you.
sir. We really appreciate
I
You're
would,
welcome.
big man, thank you for what you said on POIs. I know you thought like taking POIs wasn't necessary, but that thing you dropped at the end was actually a gem because
Yes.
understanding POIs with your brief explanation has helped me to understand why a lot of times price runs away without me.
Yeah. Yeah. You're really welcome. So
Thank you, man. Thanks so much.
you're welcome. So I would try to create a library for this particular bootcamp. You understand? But I want you guys to be very, very active on the WhatsApp community, whereby you can share your trade ideas, like you get, so that you can build yourself. Do
Yeah,
get?
sir. But because of we that don't have the link to the group.
Is in the channel. This channel that I'm using to make this particular call. Check it. You'll see it. The WhatsApp link is there. so that you guys
Okay.
can, and please be respectful to each other. Don't, if somebody is not getting it right, don't actually make jest of the other person.
Yeah,
Be
exactly.
put the person on. And then the thing is this: anybody that is willing to like give you an account or asking you for account management or whatever, that is asking you to bring money that you can trade for, you tell them no, I can do it myself. Do you understand? And please do well not to like advertise any form of thing, anything that is outside trading. Please do not advertise it there, because it might lead to like a ban out of the community. And don't worry, we'll keep on doing calls even after this. Do you understand?
Okay.
So, so
Let
that's
me
just
try and find the link, sir. Because I just joined this group, so do.
okay. Okay, okay. So,
Gami, good evening.
good evening.
You don't pass like that. So
You
thank
know,
you, sir.
pass out. You know, pass out. Okay. Well, thank you everyone for participating. I hope to see more of us tomorrow. Thank you. Bye.
Thank you.
All right.